Okay, next topic, dividend investing. What is dividend investing? Okay, check it out. Dividend investing is a type of investing strategy that focuses on investing stocks and companies that pay dividends, okay, which is a payments made to shareholders on a regular basis, usually quarterly or annually. Yes, you would see in the reports if you're looking at stocks. Okay, hold it. Okay, so you're gonna see whether a company gives out dividends quarterly or annually, and there is the most important here is the X date. So the X date is all the shareholders that had the stock on that particular date will get the dividend. So if you're planning on getting a dividend, you make sure to know when the X date is, and especially buying those stocks a couple of days earlier than that, because the market needs a couple of days in order for the stocks to settle. So let's say you buy a stock on Monday, you own that stock on Wednesday. You have it in your portfolio, like you can see it in your Webull or Robinhood or whatever account, right? Interactive brokers, whatever it is, but you still don't own it. So make sure that there's multiple days before those X dates. So that way, let's say you have it on Wednesday and then the X date is earlier that week or next week. That way, you're going to get the dividend paid out whenever it is paid out. So that's something important here. The goal of dividend investing is to generate income for individual and potentially benefit from the long term. So with dividend investing, you have the normal capital appreciation of the stock price going higher, but at the same time, a lot of people would like to get paid kind of like rent every quarter or every year, and that's what the dividend is. It's a little bit of a drip of money kind of to have as insurance. Let's put it like, because if you think that the market would be going down or you're not sure where the market's going, at least with the dividend you know that you're getting a return wherever the price of the stock is. Dividend investing looks for companies with a strong track record of paying dividend and commitment to paying a strong. Also, another point here, don't look at the dividend right now, look at dividend history. You can there is a dividend calendar on the Nasdaq. I believe that there is one on investing as well, but the Nasdaq has one. I know that. And that way you're going to go in the dividend calendar and the dividend history, and that way you're going to see what is the dividend. Is it consistent? Is it growing? Is it declining? So make sure that if you're doing dividend investing, to make sure to see where the dividend has been. There's companies that have a track record of just increasing it or having it the same, or there is some companies that have lower dividends. That's really unattractive. Most of the time that does not happen because the stock market hates it when the dividends are cut, but keep that in mind when you are doing that. So make sure that you don't just look at the dividend. Oh, it's great. It's like a 7%. Like right now, AT&T's dividend is looking really, really good. That there is talks about maybe cutting the dividend or things of that nature. I believe so. This might be speculation about AT&T. I know there was a company. Can I think? I'll try to find it and put in a post. But there was a company that was planning on cutting the dividend. So make sure that you know Intel. Okay, I know Intel has a really big dividend right now on a percentage basis, but because it's facing a pretty harsh environment and like it declines, it missed on earnings and revenue expectations. It's thinking of we don't know exactly, but there's speculation that they might be cutting the dividend. So keep that in mind, so you don't get kind of screwed. These companies may be in a variety of industries such as utilities, financials, and consumer goods. Dividend stocks tend to be less volatile, that is correct, and offer more consistent returns over the long term compared to growth stocks. If you want to see the best chart for this, is compare the Dow Jones Index with the FTSE 100. It is FTSE 100, which is the biggest index of the London Stock Exchange. And what you're going to see that the performance for the last 20 years has been much more muted on the FTSE than on the Dow Jones. So you have to keep that in mind. And why that is because a lot of the companies in the FTSE give out dividends. They're matured companies like oil companies, telecommunication giants, um, what else? Minerals, mines, things of that nature. So a mine, pretty much, even though it's a gold mine or a diamond mine, whatever the company pretty much has, that's it. It's getting it out of the ground, it's paying out the dividend, but it's not growing. So whereas the Dow Jones or the Nasdaq are indexes, and especially like more the the U.S. stock market in general is a lot more focused on growth than on dividends. That being said, there's a lot of stocks that are dividend stocks in the United States, but you're going to see, if you compare the Dow Jones or the Nasdaq to the FTSE, you're going to see that the FTSE has a much lower capital appreciation. So you need to do the math whether you want dividends every year or every quarter, but capital appreciation would be a lot lower, or you would like you will settle for less dividends or no dividends, but more capital appreciation in the long run. So that's the offset. Okay. Before making any advice, it's important to know true risks and consider your personal financial situation and goals. Yes, we know that. Okay, give us some examples. Sure. Examples of companies that offer dividends. So it's first telling us the sector. That's really nice. So it's not only telling us the companies, but the sectors they're in. In utilities, obviously, as I said, utilities are very similar to a telecommunication giant or a minerals company, right? They offer a service, get the money, and then they distribute dividends. So Duke Energy, Southern Company, the Inexta Energy. I don't know this company. Nextka Energy, which are regulated monopolies and provide essential services and offer considered dividend stocks. So regulated monopolies. So I think utilities are pretty much companies that offer you, let's say, gas or electricity. Uh, PG&A, that's in the California. I know that one. I thought it would put it here, but it didn't. I don't know this one, but I would assume it's something similar. So it's either gas or electric, things of that nature. And again, they're monopolies. They cannot be challenged, but they're regulated. They give out the service, make some money, and then pay out dividends. Not a big fan, but hey, some people love them. Financials. Companies such as JP Morgan Chase, that's a real good one. Bank of America, that's a good one. In Wells Fargo, that one I think has the biggest dividend of these three here, which provide a range of financial services. And okay, so the paying dividends are also other considered dividend stocks. Yes, that is true. Although bank financials have had their own problems with the 2008 crisis, their stocks were pretty much hammered back then, and after that they've been on an uptrend. They also keeping in mind with the dividends here that the banks sometimes can be ordered not to pay dividends. I believe when they got the money in 2008, that's what happened. Like there was an amount of years that needed to pass in order for them to go pay out dividends or give stock buybacks and things of that nature. So their banks, they're regulated. Wells Fargo had its own problems with that fake account openings, things of that nature. So dividend stocks, banks are good stocks, but I wouldn't put them in the dividend category. Consumer goods, companies such as Prosper and Gamble. Okay, again, this was in the value. Coke was in the value. Coke was dividend growth value. So ChatGPT really likes Coca-Cola. And J&J. J&J was another value company that now we're seeing it in the dividend industry. This is more typical dividend companies, I believe, like Coke, P&G, and J&J. Much more. If you ask me, I would give these answers and not the banks. These answers and then the utilities, obviously. Real estate investment trusts, okay, REITs. These are in the news today. Companies such as Simon Property Group, Public Storage, and I don't know what that is, which own and operate real estate assets and are required to pay out a large portion of their earnings as dividends. So what are REITs? So if you're looking at dividends, you are probably going to stumble across REITs. So these are companies, they're corporations that are obviously publicly traded. They own assets, they manage those assets. It is real estate assets. And then a portion of the earnings they get from rents they pay out in dividends, or it's payouts. We can call it dividends, but it's really payouts. So they do fluctuate. Commercial REITs have been hit very hard, especially like some that have properties in New York, or even other REITs that have just the big malls, because we were, at least the common thinking was that the mall is dead, and that we're going to online shopping, and that's why REITs have had a hard time, although they are considered pretty much dividend plays. So keep that in mind. These are good answers. I'll all in all, I'll give it a good answers. It's important to know that these companies earn dividends can be important by a variety of factors. Okay, we know that before making any decisions, talk to an investment advisor. Obviously, that this is not financial advice. That is something that we say pretty much all the time. Okay, that's about the dividends, and let's go to the next one.